Good morning and welcome to the morning call for Wednesday, the 22nd of March 2017. Last night, equity markets fell out of bed, and it's quite an interesting reasoning for it in the fact that there wasn't actually any major macro news that I can really point to that can show a snap, particularly considering the financial space was the real major driver for it. Yesterday, I did speak about the financial conditions indicators in the US, and they are clearly breaking down slightly. They did fall below 100, first time they've done that in over 4 and a bit months. And then last night was the first time we've seen a bigger than 1.1% move up or down since the presidential election back on November 8th last year. That is a really interesting thing. Volatility did move up. However, it's not a huge amount, so be aware that is not going to make any form of trend, and we certainly haven't seen a huge dilemma there. But it is that financial space, and that is a real interesting point for Australia, considering that we have a 48% exposure to financial services on the ASX, and 25% of that comes from the big four banks. In fact, it's now actually ticked up to 26.47. With that in mind, it will be a negative day. You will get a drag on the ASX today, and clearly there is growing, particularly offshore, idea that going short Australian banks is getting there. You saw the RBA yesterday also alluding to the fact that they are very, very concerned about the income to debt level in the household range and the fact that there was very, very low wage growth. What I also want to point to you today is what happened in the Aussie last night. The one I think you may have woken up and seen, particularly on the notifications from us, is around pound Aussie. Absolutely fell out of bed as well. And that's down to the fact that commodities last night in the spot positions really saw a little bit of weakness. Now, Brent over my shoulder broke down to basically be below $50 at one point. It's popped back up, but at the same time, it did actually go through that level. WTI hit $46 a barrel. That's a level we haven't seen since basically back in June last year. And on the back of all of those OPEC sort of comments that we've been seeing, it suggests the market just doesn't believe what they're selling you. And that therefore is a negative around the Aussie. It's why the Aussie fell out of bed around the pound, clearly, because again, people are sort of asking that question around Brexit. But more importantly, it cannot hold on to 77 US cents. And that breakdown in commodities was always going to create a reason to probably go short the Aussie. However, what I want to specify is that China is clearly still on a medium-term view, and I'm talking 3 to 4 months here, very much on the up in terms of where it's doing. Its stimulus package has not changed despite that talk around what's going on in GDP, and therefore this may be a chance to really look at profit taking and maybe reassessing to the positions on the dips rather than anything else. Have a good trading day. I will talk to you tomorrow. There's a lot of Fed speak about around the week, and then next week we do move into the end of what will be a very interesting quarter to see how it finishes back on Friday for the 31st. Have a good day. Have a good week. Talk to you soon. Again, we are on the phones, 1-800-601-722. Thank you.